Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets. These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The United States on Thursday blacklisted 4 companies in Iran's metals sector, as well as 1 German and 3 Emirati subsidiaries of Iran's largest steelmaker that Washington said generate millions of dollars for Tehran's metals industry. The Treasury Department said in a statement that the sales agents together generated tens of millions of dollars annually from the foreign sale of Mobarakeh Steel Company products, contributing to billions of dollars generated overall by Iran's steel, aluminum, copper and iron sectors. The sanctions are the latest U.S. effort to slash Iranian revenues since U.S. President Donald Trump withdrew in 2018 from the 2015 Iran nuclear deal, exacerbating U.S.-Iranian tensions.
Moving on to the top news in the energy sector.
Fuel demand is gradually recovering as coronavirus lockdown measures ease around the globe, but a second wave of infections could swiftly undermine the trend, industry data showed. Road traffic in some of the world's major cities in June had returned to 2019 levels, but a resurgence of the virus in some places prompted drivers to stay home. Congestion in Shanghai in the past few weeks was higher than in the same period last year. But in Beijing, mobility dropped again in June as China's capital took steps to halt a new outbreak of the coronavirus. In U.S. gasoline supply rose 9% in the week to June 19, but overall, in the past 4 weeks, fuel demand was down 17% from the same time a year ago, according to data released by the U.S. Energy Information Administration. A resurgence of coronavirus cases in states such as Arizona and Texas held consumption in check.
We will now look at the top news in the agricultural sector.
The International Grains Council on Thursday raised its forecast for global wheat production in the 2020-21 season, with improved outlooks for Australia and China more than offsetting a downward revision for the European Union. In its monthly update, the intergovernmental body increased its global wheat crop forecast by 2 million tons to 768 million, up from the prior season's 762 million. Australia's wheat crop was seen at 26.2 million tonnes, up from a previous projection of 24.0 million and sharply above the prior season's 15.2 million. The improved outlook follows recent heavy rains, which broke a 3-year drought that has ravaged the country's east coast. The crop in China, the world's top wheat producer, was seen at 135 million tonnes, up slightly from a previous forecast of 134 million and the prior season's 133.6 million. The IGC cut, however, its forecast for the EU where dry spring weather has curbed yield potential. Forecast production for the trading bloc, which excludes Britain for the first time in the 2020-21 season, was seen at 128.4 million, down from a previous projection of 131.7 million.
Ukraine's grain harvest is likely to fall to 72.4 million tons in 2020, from a record 75.1 million in 2019, due to poor weather, a state weather forecaster said on Thursday. Severe drought during autumn sowing was followed by an unusually warm winter and dry spring, affecting the grain yield.
Next we have agricultural price moves.
U.S. corn futures tumbled to the lowest in 6 weeks on Thursday and soybeans fell for a 4th straight day as forecasts for crop-boosting rains across the U.S. Midwest reinforced prospects for bumper crops this year. Chicago Board of Trade July corn CN0 fell 7.25 cents to $3.17 a bushel by 16:41 GMT in the steepest percentage drop in 2 months. The December 2020 through July 2021 contract posted contract lows. July soybeans SN0 were down 3.75 cents at $8.67 a bushel, the steepest drop in a month.
We will now take a look at energy price moves.
U.S. natural gas futures collapsed over 8% to a near 25-year low on Thursday as demand destruction from the coronavirus left the world awash in gas that utilities have been forced to squeeze into storage caverns that are expected to be full by the end of the summer season. The U.S. Energy Information Administration said U.S. utilities injected 120 billion cubic feet (BCF) of gas into storage during the week ended June 19. The increase boosted stockpiles to 3.012 trillion cubic feet (TCF), 18.3% above the 5-year average of 2.546 TCF for this time of year. By the end of the injection season in October, analysts expect U.S. inventories will reach a record high near 4.1 TCF. On its second-to-last day as the front month, gas futures for July delivery fell 13 cents, or 8.1%, to $1.467 per million British thermal units at 16:13 GMT, their lowest since August 1995.
Oil prices edged higher in a volatile session on Thursday, finding support from signs of a marginal improvement in the U.S. economy but rising cases of COVID-19 in some states capped gains. Brent crude rose 24 cents, or 0.6%, to $40.55 by 15:14 GMT, after trading as low as $39.47. The global benchmark dropped 5.4% on Wednesday. U.S. West Texas Intermediate crude rose 22 cents, or 0.6%, to $38.23.
Moving on to metal price moves.
Copper prices pushed higher on Thursday, bucking the shift to safe haven assets in other financial markets, as a surge in coronavirus cases fueled worries about mine shutdowns and shortages. 3-month copper on the London Metal Exchange was up 0.4% at $5,887.50 a ton by 1600 GMT, having rebounded 35% since touching a 45-month low on March 23.
Finally, we have the most recent news on the financial market.
The U.S. dollar rose on Thursday on safety buying as fears grew over a rapid rise in coronavirus infections in some U.S. states and as trade tensions between the United States and the European Union increased. The U.S. dollar index equals USD was last up 0.17% on the day at 97.40. A dispute between the United States and the European Union, in which Washington is flagging possible changes in tariffs on EU goods, also hurt risk sentiment. The euro was weighed down as riskier assets in the region, including Italian bonds, weakened, and as the European Central Bank fought back against a German court challenge to its money-printing plans. The ECB also said it will offer euro loans against collateral to central banks outside the euro area to backstop funding markets amid the coronavirus pandemic. The euro-year was last down 0.31% at $1.1215.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.